All right, let's dive right in. If you're doing any kind of digital business that has a connection to Pakistan, there are two very specific tax laws you've absolutely got to know about. Today, we're going to demystify them, piece by piece, so you know exactly where your business stands.
So yeah, if you're a non-resident providing digital services, or maybe you're running an e-commerce platform inside Pakistan, this is for you. These rules are going to directly affect how you operate. So let's get straight to it and see what it all means.
Here's our roadmap. First, we'll get the big picture. Then, we'll dig into the two main rules, that's Section 6 and Section 6A, and, importantly, their exceptions. And we'll wrap it all up with the key takeaways for your business, nice and simple.
So first things first, why do these rules even exist? Well, think about it. Business is global now, it's borderless, it's happening online. And tax authorities, they have to keep up. This is basically Pakistan's way of making sure that digital business pays its fair share, just like a regular brick-and-mortar shop would.
Okay, let's start with the first big one, Section 6. You can think of this as the broad, general rule. It covers a whole range of payments that go out to non-residents for services they're providing from outside of Pakistan.
And here it is, the actual text of the law. I know, it looks dense, a little intimidating with all that legal jargon. But don't you worry, we are not going to read this line by line. We're just going to pull out the bits that actually matter.
So, who exactly is on the hook here? Well, Section 6 targets non-residents getting paid for a whole list of things. We're talking royalties, like, say, a U.S. company licensing its software to a firm in Pakistan. It covers offshore digital services, maybe a European company that provides cloud hosting, and it even includes the financial plumbing, things like payment gateways and card networks. It's a pretty wide net for sure.
Now, listen up, because this is probably the most crucial detail. The tax isn't on your profit. No. It's calculated on the gross amount you get paid. That's the total amount, the whole shebang, before you deduct any of your own expenses. You have to factor that into your pricing.
All right, now for the part everybody's been waiting for, the loopholes, the exceptions. When does this tax not apply? Because, let's be honest, knowing how to get out of a tax is just as important as knowing what it is in the first place.
And the short answer is yes, absolutely. But, and this is a big but, they're very, very specific. The law gives you a clear way out, but you have to check all the right boxes. Let's take a look at what they are.
To even start talking about exemptions, we have to get our heads around this one key term, permanent establishment. It sounds complicated, but it's pretty simple. It just means a fixed place of business in Pakistan, like a real office or a branch. This idea is your ticket to getting an exemption under Section 6.
So, how do you actually do it? How do you qualify? Well, there are three main conditions. First, the payment you're receiving has to be effectively connected to your permanent establishment there in Pakistan. Second, the work itself has to be done through that office. For example, a UK firm with a branch in Karachi that delivers consulting services. That income is tied to the local branch, not the head office back in London. And third, there's a little catch-all, just in case the payment is already exempt under some other tax rule.
Let's just boil this all down. It's actually pretty simple. If you're providing services from way outside the country with no physical footprint in Pakistan, you're probably going to pay the tax. But if that money is directly tied to and funneled through your physical business presence inside Pakistan, you're likely exempt from this particular tax.
Okay, let's switch gears. We're moving on to our second law, Section 6A. Now, if Section 6 was the wide-angle lens, think of this one as the zoom lens. It's way more specific, and it's aimed squarely at payments happening within the local e-commerce world.
And there it is, straight from the source. Section 6A is all about taxing payments for digital sales that happen on online marketplaces and websites that are running inside Pakistan. Let's unpack what that really means for businesses.
So for this tax to kick in, three things have to be true. 1, the order has to be made online. 2, the goods or services have to come from inside Pakistan. We're not talking about imports. And 3, it has to be on a locally operated platform. Think about ordering dinner from a local restaurant through its app. Boom, that's a perfect example of a Section 6A transaction.
But check this out. There is a huge, and I mean huge, exception baked right into the law. Section 6A says very clearly that export proceeds are not subject to this tax. So if you're using a local platform to sell your products or services to people outside of Pakistan, that money is safe.
Whew. Okay, we've broken down both rules. Now let's put them side by side and pull out the most important things you need to remember for your business. This is where it all clicks into place.
This table is the perfect cheat sheet. You can see it right there.
Section 6 is broad. It targets non-residents, and the key to getting an exemption is having a permanent establishment. On the other hand, Section 6A is super specific. It targets local e-commerce, and its big exemption is for exports. Seeing them like this makes the difference crystal clear, right?
So, if you walk away with anything today, please let it be this. Section 6, that's the big general rule for offshore services, and your get-out-of-jail-free card is a permanent establishment. Section 6A, that's the specific rule for local e-commerce, and your exports are protected. Those are the core ideas you need to guide your business decisions.
And that's our breakdown. These laws are really Pakistan's answer to a massive global challenge. Which leaves us with a pretty big question, doesn't it? As the digital world keeps evolving at lightning speed, how are tax laws all over the globe going to race to keep up?